Hello everyone, this is Amit here, and I will walk you through today's price action analysis of Bank Nifty futures using 1 minute candlestick chart. You can see that price opened within yesterday's range, gap down and a immediate support by bulls, and uh, the bar was a big bull bar, so strong uh, price action exhibited as far as bulls are concerned. They own this bar, right? Yesterday you can see that uh, price went up from uh, the first bar of the day, and it kept on going up most of the day, and it fell in last few minutes of the day, and the price was contained below the moving average, right? And it opened below moving average, but this bar is basically telling you a story that the bulls are holding the ground at this point of time. We don't take any action based on this because it is within yesterday's range, right? So we wait, but we basically listen to this clue that is being dropped. This bar is opened and low is same, right? Open is 1704.95 and low is 16996. Sorry, 16935, and then low is 0.90, so just one ticks difference, which means it was a really strong bull bar. What happened? An inside bar, a strong bear bar with no tails on top and bottom. So bears try to feel this attempt by the bulls, right? What do we do? Nothing. We wait for further action. Once you see this big bar and another bar is an inside bar, probability of trading range day increases because nobody is able to get past bar 1's range, right? That means there is going to be a fight between bulls and bears to get past this range first, and then we stand a chance to uh, see any trade for the day. What happened next? Bar 3, uh, bulls want to close up this bear bar 2. They did not allow any further price drop, right? So that's why you don't see any tail or tick. Immediately bulls push the prices up and bar closed nicely, bullish. Okay, so someone who's aggressive looking at this price action, okay, bulls made first attempt, and then it's a second attempt to hold the ground. Let's go long. Okay, you could go long here. This is kind of an I pattern. I skip this because I don't take such trades unless it had this been above the moving average gap up, I would have thought of this trade, but this is below the moving average, so I skipped it. Okay, that's the reason. Someone who basically took this long open high is 16978.60, so possibly you got long around 16979 or so. Okay, and so there was a possibility of making 30 points in that long trade. Okay, I did not take it. What you can see here is the price went up to bar 1's high and it stalled there, right? It closed above this bar 1's high barely, and you see that EMA resistance is nearby. Okay, so we wait for further price action. As I mentioned, the moment I see inside bars, the trading range probability increases. Okay, and that's exactly what happened. Bears sold the close of this bar immediately, and they pushed the prices down, and the bar closed at its low. So bears taking the control. Those bears who were active on bar 2 came back in and started pushing the prices down. Again, I did not take this short because this price action consecutive 3 strong bull bars was there, and I wanted a second entry. Okay, hence I skipped it. In hindsight, I should have gone for this trade, because this was a second attempt by bulls which was failing. The first attempt was this to hold the ground. Second attempt is basically getting past this range, and this is failing, okay, which was a clue that bears were winning at this point of time, and possibility of trading range day was there, right? But that was all hindsight analysis. Someone who picked it up would have gone short below this bar low. Why this bar low? Because this is kind of a 3 bar pattern. This bar, and this bar. So you see that 2 bars, 2 up bars, and then 1 bar which is negating the whole range that was covered by these 2 bull bars. So that is a failure at day's high, right? Bar one's high, and then it continued down. Someone who shorted this 16,980 would have definitely gotten more than 30 points for sure. It went beyond basically 50 points. So if you book part profit at 30 and remaining at around this bar's low, you could have made 40 points, at least 40 points, right? This is 980, this low is 935, so on an average 40 points were possible from this short. I missed this. What do you see here? Even after this good follow through, the bar failed to poke through bar one's low. So the trading range comes into picture. It is failing on either end of bar one's range, right? So this failure, an inside bar which followed this failure, right? And it did not have a strong bearish close, right? What happens next? This bull bar, see, this bar's low is 16939.5. This is 938.50. So bulls bought the low of this bar, right? And it pushed the prices up and closed at high. So this is a clue that bulls are dropping. We know now that it's a trading range day. That is certain, right? This is how you identify trading range day, because the price is failing on either side of the day, right? And there's a failure at a day's low. You see strong bear failure here. Bulls bought the low and they push the prices up. What do you see next? This bear bar, weak one. This is an attempt by bears to push the prices down, but all that was basically absorbed by bulls, and these bears are trapped. So this is all this price action is telling you that the price failed around this area. Bulls are getting stronger at day's low, okay? So you can go long about this bar's high, which is 16,969, and that's what you see. The bulls bought the close of this bar and immediately pushed the prices up. Agreed, there's a resistance nearby, which is this EMA, but looking at this price action, this was really a compelling trade to take. Okay, what you could do is you could uh, see if this bar fails. Okay, there's some bear bar that comes in, and uh, it's not able to move past EMA, you could get out. Okay, if it is really something that you cannot manage, you are getting emotional. Okay, what do you see? It went till EMA and it ticked and it came back, but the bar did close positive. Okay, so we wait. We have taken this trade with the probability is kind of 50-50, so we need to go for higher reward, and I'm going for 1:3 rewards all the time, or almost all the time, right? So what you see next is this bar. It is able to hold the ground at EMA close. So that is a sign that bulls are at least holding it. They are not letting bears to take control at around EMA, which was the possible failure point. That's why you see this big bar which broke out of day's high, right? And you got your 30 points by then. You could continue to hold the remaining position because this bar closed above day's high, right? And you could make more than 30 points for sure through this long trade, right? After this big breakout, there was a follow through of 2 bars, but there were tails on both these bars. Then this bear bar tried to fail the breakout, but that was not enough. Bulls immediately took control, pushed the prices up, There is another bear bar, weak one, bulls bought the low of this bar. So this is kind of a one push, second push, or this is a bear attempt, first attempt, second attempt. So I look at this as a triangle, right? And go along about this bar, which is 17,042.90, so possibly 43 or something about that. But this is not a trade after a decent pullback. The price has been moving up for so many bars without a decent pullback. Now, these kind of setups, traps, are effective when the trend is not too late, when it is this much movement without any pullbacks. The chances of the traps also working out becomes low. So I have marked this trade specifically for 20 points, not 30 points, because chances of getting that much more is not high. So if someone went long about here, which is something you could have made the 20 points in this bar, so just in just 2 minutes. Okay, and as I mentioned, this was late entry, so they couldn't go to 30 point, and its prices kept on coming down. After that, it was just a bear channel that was not a strong one. You can see some trading range here, and the price kept on coming down, but it was not a strong bear price action, right? That's basically what happened after 9:40. We stopped at 9:45, 30 minutes from day's open, so there were possibly four trades that I mentioned here. 30 points, then on an average 40 points. This is on an average 40 points at least. I'm being conservative here, and this was 20 points. So 30, 40, 40, 80, 110, 130 points were possible in this range, right? You may or may not be able to make all uh, the points or trades that I have mentioned here, which is fine. Our goal is to get at least 130 points worth trade and make 100 points per week, right? And what we are doing here is basically right. Our risk is equal to 10 points, and reward is equal to 30 points, right? That's what we are trying to do for any trade. Okay, that's it for today's price action analysis. I hope it helped. Thank you for watching.